Hi there, traders. This is Brad Gilbert with FX Market Insight for Monday, the 16th of March. All right, now, if you haven't turned on your charts yet, just get ready for a few big moves. The Fed has come out on the open and cut rates to zero, and they are also launching a massive $700 billion quantitative easing program, right? They're going to be buying a cartload of bonds. They've done a joint action with a number of central banks on swaps to take the pressure off that as well. So this is throwing the kitchen sink at the problem, right? Getting well ahead of the curve, trying to calm everything down. Now, I think using everything at once is a little bit of a problem because it probably doesn't give them a lot of room to move afterwards. Now, what's happening with the currencies? Well, actually, let me just give you a look at it. I'm just on the risk on, risk off page, but just have a look here at the yen and yen crosses, obviously all moving lower. The Japanese equities just opening up, coming in weak. The Aussie equities down 6%. I think they were down a bit more than that on the open, but they are sitting around that minus 6% level. This is going to flow through. Now, what we've got to wait and see is what is the impact on home base. And what I'm talking about is what's the impact on US equities. Now, there's been rolling announcements. The CDC, the mob that looks after the spread of disease and stuff in the States, is saying every meetings of people of 50 or more people should be not be going ahead for the next month or two or something crazy. All the schools in the US are being shut down state by state for over a month, right? That's going to have, this is pretty epic. I still don't understand when there's such a small proportion of people affected that why it's going so nuts, but that's what's happening, right? So this is going to happen across, I think, globally. You'll see everyone staying at home. You'll see everyone, all the kids at home. That's going to put, obviously, people out of play with their work, okay? So prepare for, I think, carnage on the equity markets, right? Now, what does that do for the dollar? Now, if I come back across, this is where we've got to wait and see what that impact is. And it's going to take a day or two for it to sort of settle down. Is what the Fed done enough to curtail the panic, or is it just a bit of a knee jerk? Now, the dollar index has drifted lower on the announcement. You know what? I think this is a buy dollar situation across the board. Looking at the Dow was up 9.36% on Friday. That's what I mean. We're going to see how this thing rolls out come Monday. Dollar one, well, it's just banging away in a massive range. It's pretty hard to work out what's going on there. But this is what I want to have a look at. Just focus on the charts here. Look at the currencies. Now, the initial reaction was sell dollars, right, on the announcement, because that's the change of interest rate differential alone sees the dollar fall against all the pairs. But then this whole situation is going to blow up, and it's going to be a sort of global reaction. So to me, it was, you got to start buying dollars. Now, the key thing here is I like the, let me just clear those charts, the writing there. I like the Aussie, Kiwi. I also like the Euro lower and also Sterling. These pairs are still going down. Now, I know the Fed's gone to zero, but everyone else is going to have to follow suit, right? The US is the main market. Everyone else is going to fall into line. So to me, it makes a bit of sense to be selling Euro. I mean, Sterling's miles away, but Aussie and Kiwi did get back almost close enough to get into potential trades. Dollar yen now, it's sort of drifted back down, but it's not exactly clear whether you buy dollar yen or sell it on the safe haven play. It looks like there's a bit of a mixed reaction there. And also dollar CAD has been cruising topside. Oil's still at 31 bucks. This is the problem. We've got this sort of pandemic going on. At the same time, we've got the oil crisis, right? This is, dropping 30% very quickly. It puts extra strain on commodities and other instruments as well. It's like a double whammy. So dollar CAD, well, with oil falling, to me, it should go up. But then you got the dollar situation. Do you buy dollars or do you sell dollars? It's a bit tricky. But Aussie, to me, Aussie, Kiwi, or definitely Sterling. Euro is a bit of a mixed one. But that's looking like I want to get into it as well. Now, if I just bring you back to the daily trade routine, just looking at, breaking it down per component. Market conditions, well, I'll tell you what, they're pretty average. In fact, I'd say poor. But and this is the spread of this coronavirus, right? So I think the media has got a lot to blame for all of this, blowing it out of proportion. Usually if someone's sick, you quarantine them. You don't quarantine the whole of society. This is where I'm sort of trying to work out. There must be something bigger behind this than what I've actually read. But we can make a bit of sense of this. Now, as I said, there are some pairs that do look quite good. Dollar CAD's probably a little bit of a question mark on that, but sterling, Aussie and Kiwi, they're going to keep going lower, I think, regardless of the Fed cutting rates so aggressively. And, their stimulus package probably outweighs that interest rate differential. The other pairs here, well, Euro's close to me to being a sell, but it's in this sort of weight area. We're waiting to see some clearer understanding of what the hell is happening, because we've had so many rolling events. And what I mean by that is we've had so many reactionary things from politicians, Trump, the Fed. You're starting to see these things roll into each other, and they all mean something quite different to the dollar, but it's slowly unwinding what the hell is going on. So just keep an eye on this. We've got to wait and see how, whether it's a strong dollar situation or, do you sell dollars? As I said, it's going to take a little bit of time to calm down. The media is all over this. They're not doing anything to sort of calm things down. They're running with the fear story massively. Now, the macroeconomic fundamentals that are due to come out. Now, don't get yourself all excited about these. These will be off the table, but it's still obviously good to be aware of what is going on. So we've got, it wasn't a hell of a lot coming out today. There's industrial production numbers and retail sales figures coming out of China. Now, that's going to be important to the Aussie, Kiwi, and obviously the yuan. These numbers the manufacturing numbers were already falling off the face of the earth. So I would expect these to be substantially weak as well. And if I just blow this up, just keep an eye on these numbers as they start to roll through. I don't know what the Chinese officials are going to be doing, but we've got about an hour and a half, hour and 20 minutes before we start to see what impact is happening on China. Now, I'm not really into trading dollar one because at the moment it's super wide, super wild, and also, it doesn't make sense what the price action is doing. You'd think the dollar would be like a couple of 100 points, or actually maybe cents, a couple of 100 cents or dollars above where it currently is. So we've got retail sales, industrial output. Keep an eye on these two numbers. They obviously are a bit of a link into manufacturing and exports and trade balance, and etc. So that could be the death knell for the yuan, also the Aussie and Kiwi. Now, the Aussie and Kiwi at the same time here, if I just come back to those charts. Now, to me, these things are caught in a spiral and they should be going down. What the Fed's done is just confused price action for the moment. So the Chinese numbers may clear up direction. I can tell you, with this all going on, an economy shutting down, and then China just stopping completely. Apparently, the good thing is the air quality over there is the best it's been in 50 years. But that could see these two pairs drop dramatically, right? So just keep an eye on that as we go through the next, next couple of hours. Really, I'm just trying to work out where we're at. So, guys, what do I suggest? At the moment, what I'm doing is I'm looking for levels to get into potentially rallies on Aussie and Kiwi. These are, I haven't put these pairs, the active pairs up here just for kicks. These to me are the pairs that I'm sort of focusing on. Now, can you get into the crosses? Well, maybe. The action is on the dollar. That's where we're getting the specific action. So they will be the majors will be the pairs that will be moving today. I'd be focusing on those more so than the crosses. Euro's holding up quite well. So obviously, to me, potentially buying Euro Sterling, buying Euro Aussie, buying Euro Kiwi could be a play there as well. And we'll see how it rolls from here. But most importantly, massively decreased trade size, right? This isn't where you make all your money, right? This is potential opportunities to get a trade on, stay in the position on the initial volatility around when you get in, and then watch it sort of run and use trailing stops to try and maximize the opportunity, all right? And that's all we've got to do. The other thing I would suggest you do, get on to Google or some of these sites and start to read through what the Fed are doing. I did listen to Jerome Powell's conference call, right, Sunday in the US. it was quite interesting. He seems very calm. He hasn't got the coronavirus. And we'll see how they continue to monitor the situation. But knee-jerk reactions, okay, aren't necessarily the best ones to be trading, and that's what we're seeing at the moment. So when you come back to the risk-on, risk-off profile, you know, you're really clutching at straws here. If I just update the correlation matrix, see what's going on there. Try and isolate the pairs that are trading. Obviously, the yen crosses are going to be the key to it, and as they are. And euro, once again, it's sort of just banging away there, just still doing its own thing. So I think buying euro against the other crosses is a play, or looking for levels to get long dollars on rallies. Or dips on the dollar, but you know, rallies on Aussie, rallies on Kiwi, rallies on sterling. Right, we'll see how it plays out from here. But you know, I just want to reiterate, we really need to see what the reaction is in the US equities. Okay, I can see like check out the Asian equities; they were down, they're now slightly up. The Aussie Kiwi equities are still down about 4 or 5%. So you're getting mixed signals here across the board. All right, DAX futures down 3.43%. So it's pretty interesting. All right, guys, just hang in there. Right? Don't buy into the media hype, into all the fear. What you got to trade is what you can see, right? And that's all we can do as traders. And just, you know what? If it doesn't make sense, just walk away. All right, guys, have a good one. Cheerio.